So always price it out, talk with an advisor who's looking at the other side of things, that they're not just insurance agents, that they also have the ability to say, well, if you didn't pay this much for insurance, you could invest that much over
Right.
here and grow it and build it over time.
Peter, very good to see you. Welcome back, everyone, and happy Life Insurance Awareness Month. How are we celebrating, Peter?
Yeah, we're talking all things life insurance here.
Yeah.
What
All
an
right,
occasion to celebrate.
Maybe. Let's find out. Let's dive in, though, because today's question, should you convert your term life policy to whole life? Many people purchase term life insurance for the affordability and protection it offers during their working years. But as life changes, the question comes up, should you convert that term life to a whole life policy? So let's, again, start with the basics. Can you break down the difference between term and whole life?
Yeah, generally term insurance is for a specific amount of time and then the coverage ends, or you could continue it, but the price is probably going to go up astronomically
Right.
after that term. And the insurance companies sort of figure if anybody's crazy enough to continue paying these prices, then they probably can't go out and get new insurance. Something has happened health-wise.
Interesting.
So, normally at the end of a term, if you decided you still needed coverage for whatever reason, you would go out and reshop for new insurance. Whereas whole life or permanent insurance, it is for the entirety of your lifetime or matures at a certain age into the future. And being a Dave Ramsey SmartVestor Pro, Dave is very much a fan of the term insurance solution. And I also generally am a big proponent of the term insurance solution, especially during our working years when we have kids at home, when we've got a mortgage debt that we would want our spouse to have paid off, when we have an income that the spouse or the rest of the family depends on. Like, those are the times when you want the cheapest bang for your buck, but you want to provide the most protection for that family possible. Term insurance really is the right solution there. However, there is a time and a place for all types. And in this conversation about converting to whole life insurance, I think we'll probably get into a few of those instances where we may want to reconsider that term is the absolute only solution for insurance. I think most of the time it's the right solution, but there's a time and a place for every one of these financial tools that's out there.
Right. And I do want to talk through the pros and cons. And as I just told you offline, it came up because I was writing my check for my term life policy and it said, hey, do you want to convert? So I had never thought about it. Wanted to talk it through with you, Peter, because you're such a great resource. So why would someone why would we consider converting a term policy to a permanent policy?
Well, I think that if you have figured out that there is a prolonged period that you're going to need that coverage, a lot of times, maybe in our early 20s or 30s, we go out and we realize, hey, we do need life insurance. Our family needs life insurance if something is to happen to us. So we go out and we price it and we get that term coverage as we rightfully should. But then we have years go by, decades go by, and all of a sudden we're like, well, that term policy that I got back then is about to expire. What do I do next? And then we're like, hey, do I need more lasting permanent coverage? Even the day after I retire, the kids are gone, the mortgage is paid off, I've got the largest amount of personal lump sum I've ever had and accumulated in my life, hopefully, right? I'm not replacing an income any longer because I'm planning on retiring anyway. Do I still need life insurance? And for a lot of us, we actually come to the conclusion that yes, we do still need some kind of life insurance coverage because we plan to spend some of the assets and we don't want to leave our spouse penniless, or we want to leave some kind of legacy behind, even if it's just that our family didn't have to come up with tens of thousands of dollars to bury us and cover final expenses, that we do want some kind of more lasting, permanent policy. And so we think about the fact that if we buy term again, it's just going to expire again, probably before life expectancy. And the little secret in the insurance world is that the companies don't issue term policies to people who are likely to die during the term. There's a very, very small amount that actually pay off because people live through the term or they drop the term, they decide they don't need it. But if
Right.
we personally decide that we do need coverage regardless of how old we get, then considering that conversion to a more permanent whole life policy might make sense.
Okay. So, what are the potential drawbacks or costs to be aware of before making that decision?
Well, your cost is probably going to go up and your amount of coverage is probably going to go down.
Mm,
When you originally priced that term coverage 10, 15, 20 years ago, they priced that price based on your age and your health way back when. And the coverage amount was accordingly in the thought that you were probably not going to die during this period of time. And guess what? Luckily, you haven't. And that's a fantastic thing. However, when you convert this to a whole life policy, now that same company says, you know what? We are actually going to be on the hook for paying a death benefit one day, because given a long enough timeline, the life expectancy drops to zero, right? So when you convert from term to a whole life, they know now that
mhm.
they are going to have some liability for paying that death benefit down the road. And so they
Mhm.
price it accordingly. The price is either going to go up substantially or the amount of coverage is going to go down substantially. And those are the things that you need to consider, as well as generally, when you're doing this conversion from an existing term policy, there is no medical underwriting. And so
Right.
that is one of the big reasons why we may want to consider this conversion. And I think
Yeah.
we're going to get into that in just a second.
Yeah, really good point. But that is the next one. What are the certain life stages or financial situations where that conversion makes the most sense?
Yeah, as we age or and have health issues,
Yeah.
right? If we look at going out at 25, 35, 45 and getting a 20 or 30-year term policy, it is exceedingly affordable. In fact, there's not many instances where somebody probably should not have that coverage in place for less than a cup of coffee, and not even Starbucks coffee, like cheap coffee, a day. You can protect your family for decades worth of your income replacement. However, as we get to be 55, 60, 65, and we get a little older, the actuarial tables tell those life insurance companies that the probability of us passing away during a new term might be significantly higher. And so they price it accordingly. And if we've had some health issues between, say when we got insurance way back when and today, then medically we might not be able to qualify, or we would be rated on the ratings table such that our premiums, if we got a new term policy, would be significantly
Right.
higher. And then we run the risk of outliving that again anyway. So that's really where, as we get older and term itself becomes that much more expensive, or we've had health issues that would prevent us getting into a new, more affordable term policy, then that's really where this conversion to a permanent or whole life policy really shows its benefits. And sometimes, we're going from, call it a $500,000 term policy that was really meant to protect the kids and replace the income. And now we're sort of at that stage where we're transitioning to retirement. We don't need as much coverage, but we don't want to burden our family with our final expenses. So we may convert a large term policy into a relatively comparably much smaller amount of whole life insurance, but that is what is serving the purpose that we need it for at that time. So it's really
Mhm.
not a terrible deal. You want to price it right.
Mhm. Well, so this is the point in the conversation, Peter, where some people this is resonating with. So if they are, curious as to whether this makes sense for them, what are the first steps? What steps should they take to evaluate whether it is right to
Well,
convert?
I think talk with your agent, talk with your financial advisor, and realize, unfortunately, that sometimes there's an inherent conflict of interest that I see far too often, that people are oversold insurance. We don't want to dedicate too much of our monthly cash flow to protecting against the what if and to life insurance. That being said, there are some substantial benefits to life insurance. It passes a tax-free death benefit, a legacy value onto our spouse or our next of kin. So if we spend our assets through retirement, it gives them a way to refill the bucket or passes assets on to the next generation. And whether we are worried about burdening them, or we have so much money that taxes may be an issue, passing that tax-free amount may be a substantial benefit in offsetting cost on either side of that. So there's not a case where this is not to be part of the conversation, but you don't want to overpay for insurance that you don't really need or is not going to be justifiable in the benefit that is received. So always price it out. Talk with an advisor who's looking at the other side of things, that they're not just insurance agents, that they also have the ability to say, well, if you didn't pay this much for insurance, you could invest that much over here and grow it and build it over time. And then one final, and I think really important consideration with this, Erin, is that most of the time in our conversation here about converting a term policy to a whole life, most of the time that conversion is not going to include with it some of the newer features of life insurance where it can be utilized for long-term care expenses, which is one of the big things that people who are entering into that window where this consideration is made, like entering into retirement, call it the decades between 55 and 75, approximately, like long-term care costs are one of the big concerns. So looking at this conversion versus just going out and getting one of the newer policies that would include that additional level of protection against the potential cost of long-term care, I think that is a big one, and why you would want to speak with your qualified, experienced financial advisor and insurance agent and make sure that everybody's looped into the conversation, having the same goals about the same concerns.
Right. Well said. Well, I'm glad we got to talk this through. I was kind of hoping for a cake for Life Insurance Awareness Month, but this is just as good, Peter. So
it's better than the benefit paying off, Erin. So.
You're right. Absolutely. If somebody would like to sit down with you and, crunch the numbers and or just talk through the pros and cons of buying whole life, what's the best way to reach you?
Give me a call at Richon Planning. We are investment minded. We help people manage the investment side of their portfolio. I'm a Series 65. That's an investment advisor representative with that fiduciary responsibility when managing accounts or making recommendations, but also a licensed insurance agent in the state of North Carolina and several other states. But if you've got questions on either side of that, I can help work it through with you with a non-biased kind of perspective on which one is better or worse. They're both just tools, and there are times and places where both can be necessary and appropriate, and I'll help work that through with you. Give me a call at 919-300-5886, 919-300-5886. You can also reach me at the website, richonplanning.com. It looks like Rich on Planning. It's my last name, Richon, so richonplanning.com.
Great. Peter, thank you.
Thanks, Erin. Hey folks, Peter Richon here with Richon Planning. So glad that you are enjoying the podcast, Planning Matters Radio. One of the tools that we've put out there that people really seem to appreciate and really are finding of value is at 919retired.com. It is your retirement tax bill calculator. If you've got any kind of retirement account, your tax deferred 401k or IRA, this is the website, this is the resource where you can go, you can plug in your own numbers, your information, you can slide the tool calculator up and down for your tax rate or your amount of savings and see what your tax bill is likely to be if you default and defer to the IRS's plan versus what you could potentially bring that tax bill down to. A lot of times it is a very significant savings. So if you have not yet, go to the website 919retired.com, run your numbers on the retirement tax bill calculator.
This has been Planning Matters Radio. The content of this radio show is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. You are encouraged to seek investment, tax, or legal advice from an independent professional advisor. Any investments and/or investment strategies mentioned involve risk, including the possible loss of principal. Advisory services offered through Brookzone Capital Management, a registered investment advisor.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a quarterly fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.